Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So let's take a look again on the Forex market. In today's fundamental report, weekly report, we have tried to actually take a look at the new fundamental data that we've got, recent statement of the Jerome Powell, and trying to tie it in some common picture, recent drop on the shares, statement of the Jerome Powell, market anticipation of the possible falling of the interest rates in the nearest few months, and changing the situation on the employment and other statistics. So in general, we are coming to the conclusion that everything is just starting, and we see only the first signs of the crisis that is coming, because the stock market has just started falling, the initial claims just start rising, and this is just the beginning of the big process of the money flows from to the United States debt market, out from all other assets that currently stand. And the recent promise of the Jerome Powell is just confirming this. So this might be interesting to read, actually, if you're interested with the fundamental background on the current situation. On the technical side, next week we have two major events, except maybe the Fed minutes publication. We will be watching for gross domestic product release and retail sales, and negative numbers, which is actually should be. I don't know what the particular statistics will be published, but in general, United States economy actually should be negative currently. It's gross domestic product. We will see what will be published, but anyway, the bad numbers might be really big catalysts of the action on the forex, and euro currency could show big action if we get really bad numbers on the gross domestic product from the United States. Also, the PMI numbers will be widely published, not from the United States, but actually across the globe, in the European Union, in other countries as well. So that's about the fundamental background. On the technical side, here we are still watching for the upward action. Right above the market stands solid resistance, so you could see we have the overbought here. It's around 106.30, and confidence resistance 106.68, 107.12. So for those of you who trade on a daily chart, market already stands rather close to the resistance area. And although the divergence that we have here suggests that market should take it out of the A point top before any other action will happen, but for trading on a daily chart, it makes sense to wait for the bounce out from this resistance. So when the market reach this level and then shows the pullback, I'm hitting on the hand and shoulder pattern. So, and on this pullback, it will be much more attractive situation for considering taking the long position. That's what if you trade on a daily and high time frames. So you need the bounce right down there. On the lower time frame still, it is possible to consider taking the scalp long position. So for instance, on the follow time frame chart, we have this ABCD pattern that we already discussed. Market hits the COP, reaction has followed. It is proper reaction. It's not very strong, but still it is more or less moderate. So 30% of this upward action has happened. With the CD pattern, you could see that we have clear acceleration on the CD leg, which is suggests that market should climb at least to the OP. Well, and in general, this recent two candles relatively strong, so market close almost at top. The problem with the OP right now is just it stands slightly above the overbought. So maybe with this upward action, market could slow down a bit, or maybe it will be reached with some spike during the some data release, or maybe FOMC meeting. Minutes protocol will be released, so market could show some spike, trying to just spike the overbought condition, overbought level, reach the OP, and then turn to reaction. So we should expect some rising volatility and spikes above this area, above 106.30 level, between 106.30 and 106.70. So this might be unstable price behavior. But in general, this is a level where market should start the reaction that we're waiting for on the daily chart. It's moving back to the forming the right arm, which might be the reason for taking the long position on the daily chart. But still, till the OP, it's still rather solid distance, it might be considered for taking the long position for a scalp trade. At the same time, here we have to keep an eye on another pattern, which is actually 3-drive buy on the hourly chart. Actually, this is just the continuation of the butterfly that we discussed on Friday. So if you remember, on Friday we talked about this butterfly pattern, said this market could show some pullback. Some ABCD pattern actually has been completed. So maybe even you have taken the long position already, giving us guardian steeple to buy. So as you can say, actual pattern. So in general, the background for taking the long position, scalp long position already is done. So here's all preparings have been formed already. And probably it is possible to consider taking the long position with the stop somewhere below the confidence initially. So you could treat it as just single butterfly with the 1618 extension, but also you could treat it as a 3-drive pattern. Just because the extensions of this swing and that swing perfectly agrees right there around 106.27 area. And this target stands slightly below the OP, which stands 50 pips higher. Why this level is important? Because if you take the numbers, you will see that it perfectly corresponds to the neckline here. It's harmonic line of the hand and shoulders, and this perfectly fits the target of the 3-drive, perfectly fits the neckline. Also, this is favored 50% resistance level. So guys, I wouldn't just take off the table this target, despite that we also have the OP. And if you would like to take the part in this trading, taking the long position here, when the market hits this target, think about at least tightening the stop or even book some result, maybe partially. If you would like to stay possessed on the OP target, that's great. But when the market reaches this level, just manage your position. Tighten the stop or even take some part of the profit. Because this level also seems important. That's a few patterns that we intend to keep an eye on in the coming week.